Today, the crypto market is quiet. There are no breaking headlines, no explosive pumps, and no dramatic crashes. And that is exactly what makes this moment dangerous. Most people believe nothing important is happening. Prices are moving slowly. News feels repetitive, and attention across social media is fading. But history tells a very different story. The biggest market moves are never born in chaos. They are born in silence. This phase is called compression. Compression is the period when the market quietly decides its next major direction. By the time that decision becomes obvious, most people arrive too late. This video is not about hype or predictions. It is about understanding market behavior. Because crypto does not reward excitement, it rewards preparation. Bitcoin right now is doing something unusual. It is not breaking down, and it is not breaking out. It is holding structure. Every major Bitcoin cycle begins the same way. Not with fear and not with euphoria, but with boredom. When volatility disappears, weak hands leave the market. Strong hands stay patient. Institutions do not buy headlines. They buy time. At this moment, Bitcoin is behaving like an asset that is being accumulated, not distributed. This does not mean price must move immediately. It means downside pressure is being controlled. Markets do not move higher because people feel bullish. They move higher because sellers become exhausted. And right now, sellers are tired. Ethereum is telling a different story. Quietly. While retail investors focus on short-term price movement, institutions focus on infrastructure and positioning. ETF discussions, staking models, and long-term settlement value are shaping capital flows behind the scenes. This is not speculation. This is structural capital. They build positions during weakness and silence. Ethereum is evolving from a speculative asset into a foundational financial layer. Markets always reprice assets after their utility becomes obvious. Never before. Most people will start paying attention when volatility returns. By then, the positioning window is already closed. This is only the beginning. Because when markets move after long periods of silence, they do not move slowly. They move fast. The altcoin market is showing subtle signs that most traders are missing. While Bitcoin and Ethereum dominate attention, smaller coins quietly rotate as capital flows from retail to strategic accumulation. Liquidity is shifting, and the patterns are clear to those who know where to look. Volume may seem low, but that is deceptive. Smart money often moves silently, building positions over days or weeks while retail waits for excitement. These accumulation phases are almost invisible until the breakout happens. And by then, most traders are too late. Global macro factors are also influencing crypto in ways that are not immediately obvious. Interest rate adjustments, dollar fluctuations, and geopolitical pressures create conditions where digital assets can behave counterintuitively. When traditional markets are stagnant or uncertain, crypto can react sharply, often before anyone expects. Psychology plays a major role. Markets move on emotion more than logic. And boredom is one of the strongest emotions of all. During quiet periods, retail exits out of impatience, leaving space for large investors to consolidate positions. This is why periods of silence are so critical. They precede explosive momentum. Looking at historical cycles, every major crypto surge followed long periods of low volatility. These are not random. They are structural. Understanding this allows prepared investors to anticipate movements without relying on luck. Institutional positioning also signals the next phase. When large holders quietly buy during market.com, it sets the stage for sudden upward pressure. Likewise, if they reduce exposure slowly, it signals a controlled retracement rather than panic. These subtle signals are visible to those watching market depth, on-chain activity, and derivatives flows. Retail traders tend to focus only on price charts, but the real story is in the layers beneath. In accumulation, liquidity, and timing. By recognizing the difference, investors can protect capital and potentially profit before the crowd reacts. As this period of compression continues, patience is essential. Reacting too early or chasing momentum can lead to losses. But observing, understanding, and preparing positions can yield advantage when the market eventually erupts. Crypto will not announce its moves. It will move quietly, then quickly. The opportunity exists for those paying attention during silence, and the risk grows for those who wait for headlines to confirm what already happened. The next phase of crypto is coming, and it may happen faster than most expect. Those who understand accumulation, liquidity, and market psychology will benefit. Those who follow emotion and hype will be late to the party, if they arrive at all. This is the reality of crypto markets. Preparation always beats prediction, and understanding behavior is far more important than guessing price. Now, let's focus on risk scenarios. Even in quiet markets, understanding potential downside is essential. Crypto is inherently volatile, and complacency can be dangerous. Bearish scenarios often unfold quietly at first. Liquidity dries up in certain altcoins. Large sell orders hit selectively, and retail panic triggers exaggerated reactions. Those who anticipate these patterns can adjust exposure, hedge positions, and avoid unnecessary losses. Conversely, bullish scenarios are equally subtle. Accumulation phases, low volatility, and slow upward price creep are signals that institutions are preparing for a move. When these conditions align with macro tailwinds, the market can surge unexpectedly. Smart money doesn't wait for confirmation. They act during silence. They act when headlines are absent, and they often profit while retail remains distracted. Understanding history is critical. Every major crypto rally in the past decade followed long periods of low activity. Patterns repeat because human psychology and institutional behavior are consistent. Volatility compresses, liquidity concentrates, and the stage is set. Education and preparation are your tools. Watching the market superficially is not enough. You must observe trends, accumulation, on-chain metrics, and derivatives flows. These signals tell the story that price alone cannot. As retail loses interest and social media attention fades, opportunity grows. The quiet periods are when positions are quietly built. The loud periods are when profits are realized. Patience, discipline, and observation define success in crypto. Reacting to hype is a losing strategy. Waiting for fear to subside often costs missed opportunity. The compression phase ends abruptly. A sudden breakout or breakdown is inevitable. Being positioned before it happens is the difference between profit and regret. Finally, remember that crypto markets are global and interconnected. News, liquidity shifts, and institutional flows in one region affect markets worldwide. Timing, preparation, and understanding human behavior are always more powerful than short-term predictions. This is the reality of crypto investing. Opportunities exist for those who study behavior, understand positioning, and act patiently. Chaos and hype will come and go, but those who focus on structure and preparation consistently benefit. The next wave is approaching. Stay alert, stay prepared, and understand the signals beneath the surface. As we reach the final part of this analysis, it's critical to understand one key truth. Crypto rewards preparation, not speculation. It rewards those who watch, analyze, and act quietly. It punishes those who chase headlines or hype. The next major movement is approaching. It may happen suddenly. It may happen faster than most expect. And when it does, the opportunities will be in the hands of those who positioned themselves wisely. Institutional behavior is the roadmap. Accumulation, liquidity, and patience. These are the signals. Ignore them at your peril. Follow them, and you gain a significant edge. Retail psychology is predictable. Fear and greed dominate short-term thinking. Boredom dominates the preparatory phase. Those who can distinguish between temporary noise and real signals will always be ahead. History repeats itself. Every cycle has the same rhythm. Silence, accumulation, breakout, realization. Those who recognize the rhythm early consistently profit. In the coming days and weeks, watch the markets carefully. Notice subtle liquidity shifts. Notice accumulation in top coins. Notice low volatility periods. These quiet signals are louder than any headline. Remember, crypto does not announce its moves. It moves silently, then explosively. Your success depends on your ability to see what others cannot. Patience is not passive. Observation is not passive. Preparation is action in its highest form. By staying informed, analyzing behavior, and preparing positions, you can navigate crypto's volatility safely. You can seize opportunity without panic. You can profit when others are distracted. This is the nature of crypto. This is the path of the preparer. This is how wealth is built quietly before the crowd reacts. So stay alert, stay disciplined, stay patient. The next wave is coming. It is silent now, but it will not wait for anyone.